Hi everyone, welcome to another video. In today's video we will discuss the stock Himax Technologies. If you found an interesting company yourself and want me to look into it, let me know in the comment section below and I will give my honest opinion about what I think. Himax Technologies is a fabless semiconductor solution provider dedicated to display imaging processing technologies. Fabless means that the company does not have a factory to build their own chips, but they outsource them from other suppliers. Himax is a worldwide market leader in display driver integrated circuits and timing controllers used in TVs, laptops, mobile phones, tablets, car navigation, virtual reality devices and many other consumer electronic devices. Himax is founded in 2001 and headquartered in Taiwan. On January 14, 2022, Himax introduced industry-first 288Hz 8K TV Decon solution. This is a timing controller chips which makes it possible to have a 8K 288Hz display. So far there is no better display and timing controller on the market. So this is very good news for the company and maybe a big revenue driver in the future since gamers demand better and better displays. Himax introduced their first 8K display chip in 2018, but in the last years the sales of the chips have been skyrocketing as gaming is gaining popularity. In 2021, Himax 8K TV Decon sales reached a record high with an annual growth rate exceeding 50%, an indication of a successful market penetration. If we go and look at their latest earnings presentation, we can find a lot more helpful information in understanding the company to its fullest. In a brief summary, Himax is a leading imaging and human interfacing technology innovator. They have a diversified base of customers and revenues. This combined with operational and public market performances. Since IPO, Himax did no fundraising so far and they are committed to high dividend payout ratios. They have innovative new products capturing growth markets, which we saw in a news article before. We can see here that Himax has currently 10% of the market share in display drivers. In automotive, the market share is at least 32%, which is growing substantially. If you see declining market shares in other areas, don't forget in the last 2 years the digital demand has been increasing very rapidly. So it's only normal for them to lose some market share because they can't keep up with the demand alone. Himax has a pretty strong global reach and is located in Taiwan, China, US, Israel, South Korea and Japan. Himax has 3,021 patents and almost 500 pending patents for worldwide approval. So you might ask, who are the customers of Himax? You would be surprised. Himax has customers like Samsung, Google, Microsoft, Lenovo, HP, Sony, Mercedes, Xiaomi, Huawei and many more. So they have a very low risk in losing revenue when one company stops using their products, since their customers are so well diversified. Since IPO, the company has returned $650 million to shareholders through dividends and share buybacks. Himax likes to do high dividend payout ratios on their strong confidence to execute on strategic growth initiatives and their strong financial position. For me personally, I would prefer them to do a lower payout ratio and do more share buybacks where they can on their relatively cheap valuation at the moment. In Q3, Himax grew their revenue by 15% quarter over quarter, which is very solid. The gross margins are getting better, so they are earning more money for each sale. It's good to see the company is getting more efficient over time. The balance sheet on the other hand looks very good too. At first sight it might look that Himax has only $230 million in cash, which is already pretty high for a $1.8 billion company. but Himax has 400 million in accounts receivable and 226 million in accounts payable. Accounts receivable means they deliver the products to customer and are still waiting for the payment. Accounts payable are pre-orders from customers. They receive the cash, but it counts as a liability till Himax brings the products to the customers. So if you add that up, Himax has more than $850 million in future cash. So we don't really need to worry much about the high dividend payout ratios. They got plenty of cash to pay some premium dividends. Of course, they have some bills to pay, but these are relatively low. For Q4, Himax is looking for revenue growth between 4% to 8% quarter over quarter, with gross margins of around 50% depending on their final product mix. So far, Himax looks like a pretty healthy company. The only question we need to ask ourselves before investing is if the company is fairly or undervalued. The current price to earnings ratio of Himax is 5.5 with a forward PE of 4.2. If we check out the price to earnings to growth ratio, we have a number of 0. I have not seen this before. Below 1 indicates that a stock is undervalued. Just by looking at these metrics, it is safe to say that you're not buying this company expensive at all. Another metric I like to look at is price to cash flow. Here again we see the numbers are a lot lower than peers in the industry. The growth numbers are very strong either. In this picture you can turn a blind eye to the CapEx growth score. Since Himax is a fabless semiconductor company, they do not need to upgrade capacity of their factories. Given the fact that small caps are underperforming since last year, Himax could outperform the market in 2022 in my opinion. They got an increasing amount of pre-orders coming in for their products, and the chip shortage is expected to last until at least 2023. So how am I approaching Himax? I'll be buying the next months more and more of this stock if they keep getting pushed lower. I won't go all in at once, but buy small pieces over time. I think this is very important in these volatile days. This was everything for today. Thanks for watching. Subscribe and smash the like button if you enjoyed the video. If you have any questions, leave them down below in the comment section or send me an email. Below the video you can find a link to Bug0 and Bugs Crypto where you can get a free share when you top up your account. Take care and see you in the next video.